Hello everybody. So today we're gonna start with next lecture, which is accounting equation and journal entries. All right. We will study accounting equation journal rules and some MCQs. All right. So first of all, what we will study is accounting equation, effect of transactions, double entry systems, types of accounts, journal, and solve journal entry example that we will see 20 plus MCQs we will see with the explanation, also some PYQs, all right? So the most important is accounting equation. We get questions in almost in every finance account assistant exam from this equation. The equation is asset equals to liabilities plus capital, all right? So what is asset? Asset, as we have seen yesterday also, everything the business owns or is owed to it. Alright. It is asset. For example, cash, bank balance, debtor. We have seen debtors are those who owes us money. Alright. What debtors? Debtors are those who owes us money. Then the stock we have seen, the land, the machineries, goodwill, prepaid expenses. These are examples of asset. Then comes liability. What is liability? Everything a business owes to outsider. Whatever we owe to outsider is an example of what is liability. So for example, creditor. Creditor, you have to remember whoever we owe money to is a creditor who we owe money to. This gets very much confusing sometimes, so we'll have to remember this. Whoever we owe money to is a creditor. Then bank loan is a liability. Outstanding expenses is a liability. For example, we have given a room on given a room on rent. For example, we have taken the prepaid rent, like we got the rent prepaid itself, then that will be an outstanding expense. All right, the bills, or we can say that if we have a shop or store, we have to repair it, right? Repair it, repair it. Right? That is outstanding expense, the bills, the payable, and debentures. We will see what are debenture. Debentures are something offered by government on the basis of those debentures. Loans are given, and we will see in the upcoming videos. So, what is capital? Capital is the owner's investment in the business, right? Whatever the net worth is, the owner of is the capital. Whatever owner invest is the capital. For example, capital introduce whatever the investment is done for the first time. The profit I did, less trying, all right, the cash that we have, right? These are the capital. So next we're gonna see effect of transactions on account, right? So effect on transaction, we will see every transactions maintain the equation asset is equal to liabilities plus capital. All right. So whatever transactions is made, right? Whatever transaction is made have to be in accordance to this equation. So first of all, let's see whatever the first step is. Owner invest money. The owner invest 1 lakh cash in the business. So we get asset as 1 lakh. All right. And liabilities, we have not taken any loan. So no loan. So capital also gets added of 1 lakh. So whenever capital is introduced or capital is increased, sorry, asset is increased, capital increases. So this we have to remember, asset increases, capital increases. So the next part is we purchase goods for cash. What is cash? We have seen asset, right? What is cash? Cash is asset. We purchase goods for cash, right? Stock. What is stock? Stock is also asset. Cash decrease, but stock increases. Cash decreases by 20,000. Stock decreases. There is still no change in the liability. Capital does not change. You must be thinking that we have bought uh, we have bought we have bought goods for 20,000, all right, but we have seen that cash is gone, all right, cash decreased and stock increased, right? So this is the way the cash is given in return to stock, so there is no change in sorry this there is no change in capital, all right. Liability to there is no change. We have not yet taken any loan. So swaps. So the next part is so purchase good on credit. We have got this credit. Credit of 15,000 we have purchased goods on. So stock will increase. Our assets are increased. Then creditors, right? Liability we have liability with creditors of 15K. Liability will also increase. Capital will have no change. This we have to remember whenever we purchase goods on credit. We purchase goods on credit, right? Then capital do not change. Capital do not change, right? Capital don't change. This we have to remember. Then asset also increases, but at the same time liability also increases. So the next thing is the next thing that we have to see is so sold goods for cash of 20,000. So cost is 20,000, 25 for 25,000 we have sold the good. So the stock of 20, this we have to see the cost was 20,000 and whatever the goods we have sold we got 5,000 as profit, right? So cash increases by 25,000, all right, and the stock decreases by 20,000. This we have to remember. We see the decrease in stock at the cost, not the selling price, all right. So there'll be no change in liability now. Profit is 5,000 and asset increased, capital increased. We take profit as capital, right? Whatever the gain is, whatever it is, whatever the profit is, we take it as capital. So next is paid salary of 8,000. What is salary? Expense, right? So cash is decreased by 8,000. So asset will asset will decrease and capital will also decrease, right? Asset will decrease, capital will also decrease. There'll be no change in the liability. Then if we take bank loan of 50,000, then also there'll be an increase in the there'll be an increase in the uh, asset, right? Asset in the bank, right? Bank balance will increase and the liability will also increase, right? Liability increased, there will be no change in capital. Asset increased, liability increased, right? Liability increased and asset increased. Then we pay 10,000 to the creditors. So there'll be a loss of 10, a loss of asset. The asset will be decreased by 10,000. Then the creditor's liability will decrease. So over here, the liability was in plus, the liability increased. Over here, liability will decrease by 10,000. The total liability that we have till now is 65,000. That is 50,000 is loan, 15,000 is creditor balance, all right. And then 10,000 we have paid. We will be left with 55,000 of liability, all right. So over here, there'll be no change in capital and the asset will decrease and liability will decrease. So we withdraw for personal use, cash will decrease, drawings will decrease. We will be doing drawings. So capital will decrease. There'll be no change in liability. Asset will decrease and capital will decrease. All right. So, so now let me show you how it is completely balanced. Bear with me for a moment. So here we can see owner invested 1 lakh. There is capital 1 lakh. Then we got 20,000 of stocks. All right. Then there was decrease in asset. So still the same 20,000 we got plus and 20,000 we got in decreasing. Right. Then stock increased by 50,000 and the liability will increase by liability also increased by 15,000. So now over here, cash is 25,000 we got cash and stock got reduced by 20,000. Right. So over here, we got decrease in cash as 8K. There was said decrease and capital decrease as well. Right. So let's go for the next part. Next part is double entry system. This double entry system is very important part. Who introduced double entry system? This is very important. Who introduced double entry system? Double entry system was introduced by Luca Piccioli. Right. Luca Piccioli introduced double entry system, and we have gotten an MCQ on this already in the previous year paper. That is who introduced double entry system of accounting, and that person was Luca Piccioli. This we need to remember. Okay, so what is double entry system? Double entry system is every transaction has two aspects, a debit and credit. All right, there'll be a debit aspect and there'll be a credit aspect, and both are recorded simultaneously. All right, there'll be a balanced aspect, two balance aspect, debit aspect and credit aspect. Okay, now we'll say dual effect. There'll be every transactions affect at least two accounts, and one is debited and one is credited. All right, so there'll be a transaction. Say we will buy machinery. Right? We'll buy machinery on cash. If we'll buy machinery on cash, the cash will decrease and the asset will remain the same. Right? How? Cash will decrease, but capital will increase. Right? Capital will increase as machinery is added in the capital. Right? So these are the something that we need to remember, that every transactions affect at least two accounts. That is, one is debited and one is credited. Plus there is self-balancing part. So total debit is always equals to total credit. This is what trial balance style is. What trial balance is for? To check the arithmetical accuracy of ledger. Right? To check the arithmetical accuracy of ledger, that is total credit is always equals to total debit is always equals to total credit. Then what else are the objective of both giver and receiver are recorded, making account complete and reliable. Okay, so both the giver and the taker is recorded. Like if we goods purchase goods from, say, Ayush, right? If we purchase goods from Ayush, all right, there'll be a goods account, there'll be an Ayush's account, all right. So both the accounts are recorded, so it'll make it reliable and complete as well. So next part is error detection. So if debit is not equals to credit, if debit is not equal to credit, then what get is we get error, all right, and this is checked. This is also checked, and if debit is not equal to credit, then we will see that there must be a skip of transactions maybe, or we have done some arithmetical error. All right, these error are checked by this. Then legal evidences are also there whenever a tax authority will come on and ask for the mm, excuse me, and ask for the documents. We will have legal evidences that will support, and we can show that in the court, and we will prepare profit and loss and balance sheet statements. That final statements can be prepared to show the if the business is in profit or not. All right. So now we saw what is account. Right? We saw what is account. So account is systematical record. So now we will see some types of account. There is personal account, real account, and nominal account. There are three types of accounts. All right, personal account, real account, and nominal account. Right. So now let's see what is personal account. First of all, let's see what is personal account. Account of a person, firm, or companies or banks. This is a personal account. And what is real account? In real account, we record assets. We record tangible and intangible assets that we will see. And what we record in real account? Assets. We need to remember this. Asset in personal account, we record name, right? Whatever we record in nominal account are expenses, losses, incomes, and gains. Right? Nominal account record expense, losses, incomes, and gains. So let's see some examples. First of all, let's see personal account. Whatever we saw was personal account records persons, firms, companies, and banks. For example, RAM account, bank account, capital account, drawing account, debtor account, and creditor account. All right, all. These are all. These are all personal accounts. Then we come with real account. What is real account? Real account we record assets. All right, assets we record in real account. Just remember this with personal account we record person, and real account we record assets, and nominal account we record income, gains, and losses. So in a real account, what is recorded? Cash, goods account, land account, building account, goodwill account, patent account, right? These are some real accounts. So what is cash? It's a tangible account. Goods is a tangible account, tangible asset, sorry. Land is a tangible asset. Building is a tangible asset. Goodwill is an intangible asset. And patent is intangible asset. So the next part is expense and losses are recorded in nominal account. So this salary, rent account, commission account, interest account, sales account, and purchases account. These are some nominal accounts. So these are the golden rules. These are most important rules. First of all, what we need to remember is whatever is recorded in the right, whatever is recorded in the account. So like personal account, what we record in nominal account, what we record in and in real account, what we record. This we need to remember. And the next part is some example. So if there is given Ram's account, what we will say, it's a personal account. And if there is given salary account, this is for us, this is a, for the business owner, for the business, it's an expense, right? So what salary account will be? It will be nominal account, because in nominal account only the salary is recorded. All right. So next is these golden rules. These are most important. So for personal account, the golden rule is debit the receiver and credit the giver. All right. Credit the giver and debit the receiver. Debit the receiver, DR and CG. CG. All right. Debit the receiver, credit the giver. This is very important. And in real account, what is the golden rule? Debit what comes in, credit what goes out. In nominal account, what is the rule? This is debit all expenses and losses, credit all incomes and gains. Credit all, this is easy in compared. Credit all incomes and gains and debit all expense and losses. So debit what comes in is a of golden rule of real account, and credit what goes out is of a real account. So debit the receiver and credit the giver is of personal account. Right. So this is, so next part is, I don't know whatever this is happening. So next part is journal, right? And the format of, and the rule how it is. All right. We will see journal. Journal is the principal. This we need to remember. Journal is the principal book of account. Book of account. Why? Because we record transactions first in it. We record transactions first in it. Right. So this is the principal book of account. So standard rules of journals are: we record date, then particulars, and ledger folio. LF means we have got direct question. What is the full form of ledger? LF. This is ledger folio. Right. So this is debit. On the left side we write debit, and on the right side we write credit. Correct. This is seen like, and this is the narration that we write underneath in the brackets. Right. This is also in a part of the syllabus, and most of the teachers have not taught this. This is the narration that we read in the brackets. So in date, we need to record all the dates. In in particulars, we need to record all the transactions that are done. Right. In ledger folio, we need to just remember this as, we need to write ledger folio, the page number. Right. This we need to remember. And whatever amount is debited, whatever amount is credited, this we write over here. So these are the rules. Identify the account involved, right? So like this is asset, right? Which account will be affected? We have seen real account. In real account, we see asset is affected. So this is real account, and we will use the use the golden rule of real account. Debit what comes in, credit what goes out. So see, debit, we debited cash of 1 lakh, right? Capital account. And credit what goes out, we need to do. So next is purchase account. All right. What is purchase account? It's a nominal account. Why? Because it is shown as expense and losses. Expense and losses are shown in nominal account. This is machinery account. This is personal account, right? So we need to use the rules accordingly. Account type we need to use. Then we need to apply golden rules. Then we need to write debit first, then credit, right? This is not important. Then we need to write narration in the bracket. So for example, owner invested 1 lakh in the business and purchased good of 20,000, purchase machinery of 50,000. So in the next lecture, we will prepare a proper journal. All right, we will prepare some transactions. We will record them in the journal. We will one more thing, recording. This is most important. Recording transactions in journal. Recording in journal is known as posting. Right, posting. Posting is what means recording in journal. We have got MCQs as well in this. So let's see some short general entries. Right, we need to see these and learn the pattern, how it is done. And in the next chapter, next video itself, we will make a proper ledger and you will see, sorry, we will make a proper journal and you'll see how the transactions is done. So started a business with cash of 50,000. All right, with cash of 50,000. So what accounts are affected? Capital account and cash account. How cash account? Cash account is debited, right? And capital account is credited. So these two accounts are affected. And what is cash account? Cash account is a real account, right? And account is a personal account. Okay. So next is purchase good for cash 10,000. 10,000 for 10,000 purchased goods. So what accounts are affected? Purchase account and cash account. What is purchase account? Nominal, because what is nominal? Losses and gains, right? So nominal account is affected. Cash is real account. So the asset we have seen, cash is asset, so real account is affected, right? So we solved goods for cash 12,000. For 15,000 we solved goods. So goods account is affected and cash account. So what is goods account? Goods account is a real account. Sorry, not goods account will be affected. Goods or sales account. Okay, sales account will be affected. So what is sales account? Sales account is a nominal account, right? Expense and gains, remember expense and gains. So these are expense and gain. Cash is asset. So this will be affected. So next is purchased goods on credit from Raj. All right. Purchased account will be affected. Raj's account. What is Raj's account? Personal account. Purchase account is a nominal account. In the same way you can do all these, right? So for example, we paid rent of 5,000. So we paid rent, so rent account will be affected and cash account. What is rent account? Rent account is a nominal account and cash account is a real account. Cash is an asset, so real account will be affected. Rent is a expense and liability, sorry, expense, and for you it will be expense, and for the receiver it will be an asset. So expense and assets are recorded in nominal account. So paid salary, so salary account will be affected in cash account. What is salary account? Salary account is a nominal account. For us, salary is an expense, all right? For the business, salary is an expense, so nominal account, and cash is an asset, so real account. So up to now, other you can do. So up to now, what we have seen, asset, we see asset with real account. Real account, then we see uh, what we see in real account is, let's see over here. What we see in real account, assets. What we see in nominal account, expense, losses, gains. What we see in personal account, person, firm, banks. So this is done. So let's do some MCQ practices. So the basic accounting equation is asset equals to liability plus capital, right? If asset is 5 lakh and liability is 1.5 lakh, then what is capital? We have seen what is the equation, assets is equal to liability plus capital. What we have to find is capital. So asset minus liability. Liability will come over here, then it will be in negative, then capital. So what is the asset? We are given with 5 lakh and 1.5 lakh is equal to capital. So what will be capital? 3.5 lakh, right? So this is the answer. So when goods are purchased on credit, which of the following is correct? So this is asset decrease and liability increase. Sorry, liability decrease. So liability will to increase, no? Liability will increase and asset will also increase, right? Goods are purchased, so there is goods purchasing, right? So we got some goods, we got some stock, so asset will increase, liability will increase. Where it is, this is the equation. Asset increase and liability increase. This is asset increase, capital increase. This is also not true. This is the truth. The asset will to increase, all right. Capital will increase, but liability also increase. But here it is not given. So asset will increase, liability will increase. Next is drawing by the cash. Sorry, drawing cash by the owner will obviously decrease the asset and decrease the capital. So debit the receiver is golden rule for personal accounts. Debit the receiver and credit the giver. Next is cash account is which type of account? Cash type is a real account. Why? Cash is an asset. What type of asset it is? Tangible asset. Let's see one more thing over here, which is asset types. There are two types of asset. Based on time, there are two types of asset. Based on, sorry, based on tangibility, there are two types of assets. One is tangible, other one is intangible. Intangible, right? And based on time, there are two types of asset. One is fixed asset, the other one is current asset, right? Fixed asset is for which cannot be converted, cannot be converted. So we need to remember converted into cash in a year, within a year. And opposite to that, we convert it in cash in a year. For example, we have goods, right? For example, we have rent, the rent received, right? This, for example, is building, machines, right? So tangible asset is, as the word suggests, they are touchable. These are not touchables. We cannot touch. But for example, patent or goodwill, brand value example, tangible assets are cash, right? Goods. These are these we need to see. So these are the types of assets. I hope you understood it. So LF means ledger folio, we have seen. So which of the following transaction will not change capital? Okay, so to the paid salary to the employee is equals to capital plus liability. Decrease in asset because cash decreased, so it will change. Received commission, there'll be a gain. All right, there'll be a gain, so it will increase the capital. So there'll be asset is equal to capital plus liability. Capital increase, so there'll be a change. So owner withdrew, so there'll be a drawing. So capital will decrease. So equation will change. There'll be a change in equation. So purchase goods on credit. Okay. So here we can see what is the equation. Assets is equal to capital plus liability. So purchase goods on credit. Capital will increase. Capital will increase. Liability will increase as we have bought the goods on credit, and so will asset. So with this, the equation will not change. So next is goods account as real account as goods are assets. So which of the following is correctly journalized? Sold goods. Alright. Cash account will be debited and to sales account. As we see, cash is real, will debit, sales is nominal, and income, so credit. So the narration and general entry is to explain the reason of the entry. Simple capital account, drawing account, account are the examples of personal account, not real account, because we account for in real account what we record in real account assets are recorded, and in nominal account gains and losses. Okay, so these are the personal account. So next is when company takes a loan which is correct. Asset decreases, liability will increase. Liability increases, asset also increases. Asset increases, capital increases, but liability also increase. So this will not be take. There'll be there'll be a change that asset will increase and liability will increase. Paid rent, which of the entry? So rent is rent account dr, as rent is nominal expense, so dr will be done. So cash is real account, so goes out, so credit. Okay, so next, double entry system was developed by Lucas. Adam Smith is the father of economics, right? So this you can do. Paid creditor 15,000 if it, so asset will decrease as we paid the creditors 15,000, and liability will also decrease. Alright, we have like हमने उधार चुका दिया है, इसलिए जो liability है वो भी decrease हो जाएगी. Journal is known as book of original entry. Alright, book of original entry is known as journal. So some PYQs that have come, fundamental accounting equation, we have seen this. So cash account is classified under which real account? As cash account is, what is cash account? Asset. So in cash account we record tangible assets. So next one is this one is the same. So this is owner bought 2 lakh cash as capital, right? Which of the entry will be? So cash account will be debited and capital account will be credited. Okay. So next one is asset is this. What are the liabilities? This we can do by using the equation. Easy. You can also do it. Good purchased on credit will increase asset and liability. Asset will be increased and liability will also increase. This we have seen previously also. The book where first transactions are recorded is journal. Then salary paid in cash. Which of the following is correct? Salary account is debited to cash account. So personal account is what? Debit the receiver and credit the giver. This is the golden rule of if capital increases by 30,000, asset increase by 30,000. All right. So simple liability plus capital. Capital will increase by 30,000. Asset will also increase by 30,000. Which of the following decreases asset and decreases capital? Purchase of good on credit, increase in liability, asset will also increase. So we need to see decrease in asset. So cash received from debtor, asset will increase. So loan taken from goods, liability will increase, but assets will also increase as we are getting cash. Salary paid in cash will not decrease, will decrease asset and capital. All right. So there's a quick revision. What was uh, accounting equation? That is asset is equal to liability plus capital. Personal account rule is debit the receiver and credit the giver. The real account rule is debit what comes in, credit what goes out. Nominal account rule is debit all expenses and losses, credit all incomes and gains. So double entry system is every entry have to affect debit and credit. It is developed by Luca Pacole in 1494. So journal rules, debit account first, then credit account, then we need to add narration also. So thank you. This was the wrap chapter completed. So next chapter we will see ledger, trial balance and final accounts. First of all, in the next chapter we will prepare a journal, then we'll see ledger, and we'll prepare ledger, then we'll see trial balance, we'll prepare trial balance, then final statement we'll see. You can download the free PPT by visiting this website, comment your doubts. Also, you can follow us on Twitter. Just visit once, you will not regret. You can also connect with us on Telegram for daily MCQs. Do like, share, and subscribe as well. Thank you.